All right, I've had a few issues trying to record this already, so hopefully this works. This is a trade review for the week of October 12th through 17th. Coming into the week, we had the Trump headlines on Friday, which caused a large sell-off. In general, it looked like we're getting some sort of heightened volatility, some news risk, headline risk stuff, and I just wanted to be sized smaller this week. We had a good week. I had a good week last week, and I find whenever we get this sort of regime change, that the first week back is always just messy. Just I end up losing money, and then it takes a week to make it back, and it's just a mess. And it would just be better off if I took those first few days at least a little bit easy, and didn't have that happen. So I came in half size on Sunday, and a lot of stuff was set up for me, as you can see in blue, and I didn't really love that. I didn't really want to trade this week. I ended up not taking a lot of trades, but Sunday did look like it was set up, and then we had this huge gap up, which meant the things that were set up ended up not being set up. So I ended up taking the yen short. So we get this bearish engulfing on Friday. A lot of stuff had bearish engulfings or some sort of sell set up. And then we have this zone here. So I was looking to sell the low of this candle against the high of this candle over here. Just looking to short sort of the left eye location of that bearish engulf before I move into the gap close. I get filled here after this misses. So get filled, hourly shooting star. I move my stop to the high of that candle, and then this candle tests the left eye of the shooting star, and we move down further. So my stop goes to the high of this red guy here, and I was aware of this last high pre-break. That might become a problem, so it ended up becoming a problem. I ended up getting knocked out for a scratch, and that gap didn't end up closing until, what is that? The Wednesday session. So good trade, took a scratch, is what it is. Let's move on to the Tuesday session. So this was Sunday, Monday. Here's Tuesday. Tuesday, I was looking at wheat. I was looking at crude oil. I was looking at the DAX. I was looking at the Euro GBP. So let's get into those. Here is wheat. Sorry, here is crude oil. Here is wheat. Let's just talk about this entire trade setup for the week. We had this shooting star low. This is the 4-hour. I like to look at wheat and corn on a 4-hour because it's a bit cleaner. I was looking to short this level here. It's also an hourly level, so that's nice. My stop was here. I didn't want it at these equal highs, so stop here, short here. This is before any of this hammer stuff played out. Didn't end up getting filled. Instead, we just kind of chop around on we end up making a hammer on this session, this Tuesday session. And then this Wednesday session ends up making an inside day that tests the left eye of the hammer. So coming in on Thursday, what I was hoping for was that we'd get an inside day high break, fill me on the short, and then sell it down to the inside day high. So catch those breakout chasers. And in general, you're in line with this huge downtrend that we've been seeing. So I thought it was a great setup, never ended up playing out, and we did accept the inside day high, so I wasn't really interested in it. I'm fighting a hammer off the lows, and the squeeze potential is there. If I get short at the lows, I want it to be with a good setup, like that inside day that I was discussing. On crude, same thing. Monday's an inside day after this huge sell-off from that Friday session, so we get the inside day. I wanted to sell somewhere around here. There you go. There was a specific spot I wanted to sell. I wanted to sell it into the inside day high. Never got filled, obviously. Going into the DAX. Here we go. That's what it looked like at the close. You've got the gap open. You have an SFP of the all-time high from back here. So bearish on a weekly time frame. You have this shooting star. So the low of the shooting star is still naked. I wanted to sell somewhere around here. Do I still have it up? Yeah. I want to sell this low against this high for a move into the gap close, and this was also an inside day, right? So we could get an inside day high break into the low of a shooting star, which has been SFP of the all-time high with an open gap. I did not end up getting filled, and it sells off into the gap close. I did end up taking a trade in the Euro GBP. So what you have here is a hammer off of the lows on this Wednesday. we close below the hammer on Monday, so I'm looking for this hammer low to be taken out. Buyers are just not defending the hammer head, and when we sell off with a shooting star. This day is a shooting star, so I'm looking to sell the retest of the shooting star low, so around this area. So I was looking to sell this low over here, make that a bit bigger. Sell this low, stop was up here, well out of the way of all these lows and highs, kind of this levelly area. I was going to sell it for the hammer low, and instead, it ripped me. I think I got filled and stopped in 5 or 10 minutes. I woke up, checked my watch, and saw the alerts, and that was that. I came in the next day, and this thing ended up selling off of this zone we've been holding. Sold off into the same spot. Got long for the mean reversion trade. Stop was down here, entry up here, and I got out somewhere around here. I think I front ran the exit a little bit. So stopped for -1R and then take profit for 1.6R. So that was Tuesday and Wednesday. Let's go back to this guy over here. Let's discuss Wednesday some more. I wanted to buy the Euro stocks. We had ran the inside week low. You can see it over here. We ran the inside week low, and we had an engulfing hammer off of the prior all-time high zone. So you got the prior all-time high zone. It breaks the inside week low, can't go beyond it, and you get this engulfing hammer. So immediately, you want to buy that. Just looking at my notes. Yeah, that was Wednesday. Let's go see what that actually looked like. There we go. There's the all-time high. So generally, it's also a zone. You can see we run the inside week low. We make this bullish engulfing hammer, and I was looking to bid right there. This hourly hammer, stop below the inside week low, and just never got there. And actually, it never took out the inside week high either, so just kind of meandered around. So that never ended up being a trade. Let's go back to the this guy. Let's look at Thursday. And sorry, that first trade, the yen trade was half size, and then everything after that was full size. The market seemed to have stabilized, so I was going full size. The government economic numbers from the U.S. were still not coming out, so it seemed like the market was tradable for me. So Thursday, I wanted to take the British pound long. I thought this was a really, really good setup. You get a hammer after running stops at the lows, and there was an hourly hammer made at the hammer head. I was buying a retest of the hammer head on the daily, and it happened to be a hammer on the hourly. Just that's a beautiful setup. Did I get it? Let's take a look. I'm just looking at my notes as well. Go back a couple. Here we go. So there's the daily. You get this hammer, thrust, breaks all these highs, looks beautiful for a retest, and you go down to the hourly. There's the hammer head, right? Here's the high of that hammer day right there, and you make a hammer which had blown this structure out. So I was trying to buy that, just never get filled. It just keeps pushing up. So no fill there. And then I wanted to buy. I was not interested in U.S. equities pretty much all week. You got this gap open on the downside, an external trading hours gap, which is very rare to stay open. So you have this gap on the downside, but you're also trading all-time highs. The market is bullish in that we're trading all-time highs, so I don't really want to be short, but I don't really want to be long because there's a gap below us. So there was a mean reversion trade. Here's on ES, you get this hammer, hammerhead, beautiful, is thrust into the end of the day. That was also a hammer on the daily, obviously, right? Open, sell, close at the highs. That ended up holding. I wanted to take it on the Dow just because the Dow has been very nice to me. So I was bid here at 990. My stop was below the thrust at 891, and my take profit was going to be here. If you go down to a lower time frame chart, you can see on the 1 minute that actually did not end up playing out for me, only because it ended up bidding this area. Was that it? Right. thinking? 40. Oh no, yeah, here. It ended up bidding 46K flat, going to my take profit, aligning with this low, and then going to my actual entry at 990, which ended up being pretty much the low of the day, and then rallying from there. I don't know how I feel about that trade. I've noticed this happen more than once. I don't know. In my opinion, the mean reversion works because you want to see this aggressive waterfall into your level. Shorts are getting excited. You're past ATR. It's just everyone's getting excited, and then it hits your level, bang. You want to see them covering. You want to see them get squeezed out, and then you want to be out at the first trouble area, this low, this swing low in this case. The fact that you get front run by that stupid even number, and it gets reloaded right at the trouble area, and then comes into you, I would not have been surprised if I'd gotten stopped out. I'll have to continue looking at this, but in the future I'll have to see if this keeps happening. But to me, I didn't take it, and I don't really feel bad about not taking it. That was it for Thursday. Let's go into Friday. Trying to go fast, not really doing well here. There we go. Here's Friday. I only had a few trades that I was interested in. I was still interested in taking that same trade long on the pound dollar. We had the ZN, the 10-year. I was interested in that, and then both the Euro GBP on the long side and the pound yen short. So let's go into the Euro GBP because just been trading that all week apparently. Here it is. We had an inside day, right? Yeah. So you get this inside day, break the lows of the inside day, you end up closing with a hammer, so it's bullish. The guys chasing the breakout short have now gotten squeezed. I want to get long for a move to the inside day high. Obviously, that never fills me. I was bid over here, a little bit below the inside day low, and instead we just pretty much went to take profit. I had a friend who got long off of this bullish engulfing. I think they got long here, probably with a stop either here or here, and it went straight to their take profit. And the opposite trade was on the pound yen, right? You get the inside day here. It breaks the inside day high, closes with a shooting star. I wanted to offer here, which lined up pretty much with the inside day high, and just never get filled. It goes straight to take profit. And on GU, obviously, never comes back to test that hammerhead that we talked about earlier. And on the 10-year, what I was looking at was on the weekly, we had a failure to hold the shooting star low, close above it. So in general, I'm looking for us to run this high. And then on the daily, we get a bullish engulfing on Thursday, and the high lines up perfectly to the tick. We end up running both this high and that shooting star high on the weekly, and then we end up coming down. So this trade turns into a mean reversion trade instead of I would not be looking for new highs at this point, just looking for a mean reversion trade, and the trade was set up like that. This was the last swing high. That's the actual true last high pre-break, but I wanted to get filled. I even front ran it by a tick. I ended up getting saved by a stop out by a tick. And you just get this chop, so I scratched it. And I don't know, maybe it resolves right now. It looks like it's going to make a hammer on the 4 hour in about 10 minutes. So I ended up scratching this. And that was the week. Let's go to this guy. And that was the week right there. So I didn't even bother logging the yen trade, but the yen trade there was a scratch. I lost $25. Take the loser on the Euro GBP, get ripped in 5 minutes. Take it long the next day at the same spot for 1.6R, and then that's the scratch on the 10-year trade. And then I did not take that Dow trade yesterday. So honestly, I'm happy with just ending the week positive. I was pretty positive it's going to end the week negative. This sort of volatility, this regime shift, usually it doesn't end up well for me. So I'm happy to be out alive. Might even increase size moving forward. It's been a decent number of weeks. I think it makes sense. And I think whatever whatever moving averages or various algorithms need to take time to respond to a change in volatility. I think they've done that. It looks like most of that sort of first few days of panicky sort of trade is over. So that was the week. A very mediocre half an hour. Missed the down long, scratched this 10-year trade, and got ripped on Euro GBP. Made it back and didn't get anything with the yen. 15 minutes. I'll take that as a win.